Hi guys, it's Thomas here from COTBase.com. Welcome to our weekly COT review. Today we're going to be analyzing the 17th Commitments of Traders Report of 2021. And as we always do, we shall start off by looking at the largest changes in commercials positions. But before I start the review, just want to show you that here at COTBase.com we offer a lot of educational material, not only in written format, but we have some very useful videos as well. So back to the review and starting off with our first market, coffee. We have a 27% change in commercials positions. So for those of you who are new to this analysis, commercials are represented on the left side of this table, large speculators in the middle and small speculators on the right side. So there's a 27% change in commercials positions based on a 52 weeks look back period. And that magnitude of change can be witnessed over there. So this is of course net positions of commercials, and that change size can be seen over there. Now, if you look at the chart closely, you can see that actually this recent change in commercials positions is possibly actually pretty much seems to be the largest change on this time horizon. So it's a very significant move in commercials positions. Large speculators have shifted their positions more dynamically than usual. Small speculators, not that sure, a little bit over average, but for sure commercials are there. And this is of course a bearish COT change signal suggesting weakness coming early next week. Now, maybe the only caution we should have is the fact that Thursday, Friday, we've already witnessed a bit of a decline. But then again, if you go back, not necessarily that much back, you can see a larger than average bearish COT change signal from February, and you can see that was just at that top, and the decline that followed actually took roughly a week or so to last. So who knows what's going to happen, but nevertheless, it is a bearish change signal, could affect the market in the near term. This is a 5-year chart, and you can see that even the extreme analysis shows us more of a bearish picture in this market. So basically, if we go back over here to 2016, we have the most significant bearish extreme on this 5-year chart, just at that top. And of course, we see smaller but relatively larger. I mean, when I say relatively large, of course, I'm comparing it to a past, I don't know, 1 year time bearish extremes, how well these signals topped in the market. And I'm not saying this is the top, but the fact that we've got both of our major COT signals pointing in the same direction, I think that's something really exciting. The next market we're going to analyze is rough rice with a 21% change in commercials positions. And if we jump to the 1 year chart, there you go. So that's the change size being larger than average, no question. We had a very large bullish COT change signal. And if we go, let's see, to the 6 month, it becomes more visible. You can see that actually the market did go higher. So that was a successful signal, I should point out. This bearish signal suggests we may see the continuation of a, well, I shouldn't say continuation, because if you look at the chart, it's not in decline mode, it's more stagnating, but definitely the signal suggests we could see some weakness early next week. Now, this is the 5-year chart, different picture than coffee. You can see that the most bearish extreme levels somewhere over there for commercials, large speculators, same thing. The most bullish levels, just to show you a few examples, we're more or less in between those two extremes. The last major extreme was this bearish one, not really pushing the market much lower, although it was somewhere over there at that top. I wouldn't put too much emphasis on the extreme analysis here. There are definitely better extremes, and we may need to wait for that to happen in the next couple of months. The next market we're going to look at is oats, another grain, 16% change over there in commercials position. So there's that change size, again larger than average, pointing downwards, meaning we could see some further weakness in the market the next couple of days. 5 years chart, here we go. Again, more or less in between the two extremes, but headed towards the bearish extreme levels. Small speculators getting closer to a more optimistic area, roughly at this 2,000 contracts area. And if you look at the chart back from 2017, what a beautiful bearish COT extreme signal that was. So here maybe small speculators can hint something might happen in OATS. Moving on to large speculators, COT extreme, we're going to jump over the complex markets. That's something that is unique and only available to our subscribers. Lumber, let's look at lumber. So here we have a 44 report extreme, not huge, and as you can see on the chart, it is not that big. Now, of course, one would expect there to be a significant bearish extreme just by looking at the price of lumber, but that's not the case. So, you know, this really should warn anybody who is excited to short this market because, oh my God, prices are high. Maybe you should not do that. Well, this is, of course, an opinion based on purely COT data. The next market, natural gas, 42 report extreme in natural gas for large speculators. So that's visible over there. We had a bearish extreme, not huge, but it was there in the market, pushed it a little bit lower. We moved away from those extreme levels. I would say we have become more or less neutral in between the two major extremes. You can see bullish extreme examples and the most bearish extreme ones over here, more or less in between those. Not much to talk about. And of course, we have got sugar over here, and another soft market for this review. Large speculators, 21 report extreme. It's always great to open the charts because in itself, the 21 report extreme doesn't really mean anything. It means, of course, it does have a meaning, but it only says that 21 reports ago, those traders were at that level, meaning they were at a bearish extreme. You can see that. So you can see we had a bearish extreme in this market, did not really have a long-term effect on it. The market is gradually going higher and higher, and as that's happening, we're not surprised. Traders shifting their positions, commercials, of course, increasing their net short positions, while large speculators are increasing their net long positions. I think this could go on for multiple months, if not years, before we reach that extreme where we could expect a major shift in the trend. And you might say this is kind of boring, but you know what? COT analysis sometimes is boring. We don't always have huge all-time COT extremes. We just need to be patient, and sometimes that's really the best thing you can do is just stay on the sidelines and wait for an opportunity to come. And I'm not saying there aren't any opportunities. Of course, these weekly reviews are just showing you a brief picture of the markets here at cotbase.com. Of course, we offer a bunch of markets that you can analyze. All the COT report types that are available at CFTC, and of course also all the data types, plus the very, very special options only COT data type. If you're someone who really likes to dig into data analysis, then we do offer other data sets to analyze. And of course, we've got a bunch of very, very useful tools to analyze the COT reports. Now, let me just show you something which I believe is really exciting and interesting, the ICOT intraday indicator. It's something that we've worked on for many, many years to come to an indicator that can really simulate the COT analysis, but in a real-time way. It's not COT data from CFTC, but it is a very, very useful indicator for anybody who is trading in the short time horizon, something you might want to check out. That was all for this review. I really appreciate your attention. Thank you very much for being with me. I wish you a very great weekend, and I hope to see you in my next review. Take care. Goodbye.